So how time flies. Just a year ago, I was at AltFi 2014 looking at the rise and fall of the Roman Empire as a way of talking about the importance of building strong foundations for sustainable growth. Back then, we looked at the importance of focusing on risk control, remembering who we serve, maintaining standards as we expand, investing in technology to keep state-of-the-art systems, diversifying supply and demand of lender and borrowers, working together as an industry, and being proactive with government and regulators. Well, what I said last time clearly wasn't too bad, because I'm back here today speaking on a related subject, namely putting the building blocks in place for rapid growth. I could just repeat what I said last year, because I think a lot of it still holds true, but that would be very boring for the many of the people who were here last year. So instead, I'm going to focus on one thing, one key building block that I think underpins all others. Before I do that, let's take a moment out to put this talk of growth into perspective. It is clearly rapid by any standards. According to AltFi data, the peer-to-peer lending industry has literally doubled in the last 12 months, as you can see from the 107 with the slightly lopsided percentage mark on this slide. Many platforms have, of course, grown even faster. My own company, RateSetter, for example, has nearly trebled in volume over the same period. And looking forward, AltFi data are forecasting growth to even accelerate from here, as we can see from the steepening of this curve. To put this in pound amounts, RateSetter passed $500 million in cumulative lending earlier this month, after a little over 4 years of business, a number that AltFi now expects us to match in 2015 alone. So I think the context is clear. Huge growth, and with it, huge challenges to put in place the building blocks to support that growth. So as I said at the start, I was going to focus on one building block. What is it? What is the building block that underpins all else and that will help us keep delivering? For us, that one building block is culture. Culture is the only truly sustainable competitive advantage in business. This applies both for competing industries, peer-to-peer within the context of finance as a whole, and within our industry, one platform alongside another. We've all seen how it is the culture of some forms of finance that have been questioned above all else, and I would urge the peer-to-peer lending and crowdfunding industries to keep a real emphasis on culture. We've seen some fantastic developments in our industry in terms of innovation and product, and long may that continue. But I would argue the culture of an organization plays an equally important part in its long-term success. So what is our culture at RateSetter? As we grow beyond startup phase, it is something I focus on a lot. We've condensed it into 4 overarching principles. The first of these is respect. This is respect for our customers. We treat people as adults and put them in control of their lending and borrowing. We treat people as long-term customers with a huge emphasis on providing service as well as a great product. This is also respect for each other at work. We focus on our collective achievements, recognizing that everyone plays a part and that making a big difference as a company is made up of lots of little differences performed each day by all members of the team. And this is respect for our peers. Despite competing hard with many of you in this room, we go out of our way to look at the industry as a collaborative effort. And while we look to influence where we can, we look to support an industry at all times. The next principle is action. We are always looking for a better way to do things and to try and make things happen. Affecting change is inevitably very hard work, especially in the face of skepticism, fear, ignorance, and sometimes entrenched positions. But instilling a culture of getting stuff done is vital if we're going to keep delivering for our customers. Achieving change and growth isn't about whether you take a risk or not. It's about how you manage the risks you have to take. I say this because I think the same goes for modern-day savers who need to take some considered risk in order not to fall behind. As we say at RateSetter, you have to make today pay. Our third principle is trust. You'd have to be very out of touch not to recognize that trust, that vital currency of finance, has taken a severe knock in the last decade or so, which means we have to work twice as hard to earn it from our customers. Despite this challenge, it is something we constantly ask from our customers. I don't think there is a shortcut to earning trust. You have to set out your stall and then deliver on it. There are a number of things we do as an industry, for example, seeking third-party validation, publishing data, some good news on that today, I think, that will be announced, and being very open with our customers. But I think it is about as much what you do when the customer isn't engaged, when the customer isn't looking at the data and the third-party reports that matters. Are you acting in their best interests? Trust is a key building block to our industry, and we should keep asking our customers to judge us against that. And finally, our fourth principle is empowerment. I'm particularly passionate about this because I feel that I speak with quite a lot of customers, and there's real satisfaction in their ability to take more control over what they're doing. And I think it reached a point where they felt very sort of helpless and disenfranchised by financial services, and peer-to-peer lending and crowdfunding has given them a great sense of empowerment, and that is really to be celebrated. How do we empower our customers? We give them access. If financial services has a tendency to sort of restrict access to certain people, and peer-to-peer lending and crowdfunding has come and given them access to the normal man and woman, and they really appreciate it. There's transparency. We empower people with more information than they could previously get. And responsiveness. At this stage as an industry, we are nimble enough to be able to listen to feedback and return the compliment. And we also try to empower our staff so that they can take decisions. I think this is, again, a very important point as some of the businesses go from startup to scale up, that how they're going to run the businesses, how they're going to manage the businesses and the governance. And I think an important point right from the start is to try and give everyone in the team some degree of decision-making powers, obviously within a sensible framework. But that's something that clearly got lost in the banking industry, and I think there's a value in it. So I've spoken about our four principles: respect, action, trust, and empowerment. I think it's something that one's learning as a business, as one, again, goes from startup to scale up, that you have to distill things and keep them simple and communicate them a lot internally, and hence why we've tried to condense our culture into this acronym. I think the title of this short thing was as much about lessons from early movers. And so I would ask, for anybody, involved in this industry or looking to set up in this industry, how do they really rate their culture? Because I think if you get that right, then I think many other things fall into place naturally. So with that, I'd just like to say thank you very much, and I hope that wasn't too sort of earnest for a Monday morning, but thank you.